Welcome to Capital Luxury, your passport to the world of exquisite timepieces. I'm your host, ensuring every detail is polished to perfection. Join us as we unravel the stories behind iconic brands like Rolex, Patek Philippe, and Audemars Piguet. You know, Rolex watch prices have been on the upswing, but as the saying goes, what goes up must eventually come down. Join us as we explore the reasons behind the decline of the once iconic Rolex watch, a symbol of status and prestige that seems to have lost a bit of its luster in recent times. So, what's the deal with Rolex's decline? Well, grab your favorite timepiece and let's chat. First off, Rolex seems to be slow on the uptake when it comes to what today's consumers are craving. The era of timeless investments has shifted towards stylish and innovative designs, leaving Rolex a bit behind the curve. And don't even get us started on the smartwatch revolution. Fitness tracking, GPS directions, mobile notifications, smartwatches do it all, leaving traditional timepieces in their digital dust. But perhaps the most significant hurdle Rolex faces is its own price tag. Over a 50% hike in the last decade has left many watch enthusiasts feeling like Rolex is playing hard to get. The once attainable dream watch is now just that, a dream for many. Now, for our fellow collectors and enthusiasts, let's break it down. The high demand for prestigious brands like Rolex, Patek Philippe, and Audemars Piguet was a phenomenon. People were flipping watches for profit or simply basking in the glory of ownership. But times are changing. The shift away from spending without limits is real, driven by a desire to control inflation. Talking about the current market, we're seeing a decline in modern Rolex, Patek Philippe, and Audemars Piguet. The gray market is buzzing with lowered prices for once unattainable watches like the Rolex Daytona and Patek Philippe's Aquanaut. Even Richard Mille, with its unique charm, has faced a decline in demand. Casual buyers are taking a step back, and enthusiasts are finding their dream watches within a more comfortable price range. Now let's talk vintage. Vintage Rolex watches, once soaring high, are making a strategic exit from collections. Dealers, collectors, and market players are freeing up funds by introducing more vintage Rolexes into the market. The vintage market is ripe for exploration, offering excellent deals on classics like the Submariner and GMT Master. But here's the twist, it's not just Rolex. Patek Philippe and Audemars Piguet vintage models are also experiencing a price drop, making it an opportune time for collectors to add to their treasure troves. Even though the vintage market is in a state of flux, it presents a golden opportunity for those looking to diversify their collections. And hey, don't be disheartened by the changing tides. Enthusiasts are still going strong for brands like Omega, though the pace may have slowed a bit. Pre-owned markets are holding their ground, showing that passion for collecting watches remains undeterred. The watch world is evolving, my friends. Specialized brands are gaining traction, offering better deals and attracting collectors who once had their eyes solely on Rolex and Patek Philippe. The boom may be over, but stability and fresh opportunities are on the horizon. As we wrap up this conversation on the luxury watch market, it's clear that change is afoot. Challenges and opportunities coexist, creating a dynamic landscape for collectors and enthusiasts alike. Rolex may need a facelift to regain its former glory, but the allure of luxury watches is far from fading. That's a wrap for today's exploration into the shifting dynamics of the watch industry. Share your thoughts on Rolex's downturn in the comments below, and if you're new here, hit that like and subscribe button to stay in the loop with Capital Luxury. Now that we've dissected the various factors influencing the decline in luxury watch prices, let's delve into the economic undercurrents that have played a pivotal role in this shift. Brace yourselves as we navigate through the realms of inflation, an unstable economy, and the geopolitical tremors reverberating from the war in Ukraine. Inflation, a formidable force, dominated the economic discourse at the close of 2021 and into 2022. Its unwavering presence persisted through the initial quarters of 2022, casting a shadow on people's purchasing power. The surge in prices for everyday essentials has left individuals with diminished funds after catering to necessities like food and housing. As inflation continues its ascent, the cost of basic necessities, including luxury items like watches, becomes prohibitively high, further constraining discretionary spending. Unstable economy, an uncertain future poses a significant threat to economic stability. The prevailing sentiment in 2022 echoes a fear-driven economy, influencing individuals to adopt a cautious and reserved approach to spending. Major financial decisions, such as investing in a house or indulging in a high-end luxury watch, often take a backseat in times of economic uncertainty. The symbiotic relationship between a wavering economy and consumer behavior ripples into the luxury watch industry. The war in Ukraine. The geopolitical landscape, particularly the war in Ukraine, amplifies global uncertainty, creating ripples of instability in both the economy and the watch industry. The impact extends beyond regional borders, affecting households globally. In Europe, disruptions in gas exports from Russia and challenges in exporting grain from Ukraine contribute to rising costs of gas and food. The heightened global tension introduces a pervasive uncertainty that casts a shadow on the overall economy, affecting various markets, including luxury watches. Watch market price drop summarized. In summary, a confluence of factors has led to the decline in watch market prices. From increased COVID-19 restrictions in China, rising inflation and interest rates to the war in Ukraine and global economic uncertainty, the luxury watch industry finds itself navigating through turbulent waters. The parallels with the stock market are evident, showcasing how market corrections are an intrinsic part of any industry. Are watches still great investments? Despite the recent price corrections, luxury watches remain attractive investments. The key lies in adopting a long-term perspective. Much like the stock market, which experiences fluctuations but trends upward over extended periods, the luxury watch market follows a similar trajectory. Stability, reasonableness, and consistent value increases define a sound and stable market. The recent dip in prices serves as a correction to the unsustainable surge witnessed in 2021, emphasizing the importance of a balanced and measured approach to valuation. The price drop's varied impact. Not all watches have been affected equally by the decline. The most significant drops are observed in models that experienced exorbitant increases in the aftermath of the COVID-19 crash. The likes of Audemars Piguet Royal Oaks, Patek Philippe Nautilus, and Rolex Daytona have seen substantial decreases. Vintage watches, on the other hand, have demonstrated more resilience, as their limited production ensures enduring rarity. It's essential to distinguish between stable, incremental value increases and the rapid and sustainable spikes that characterize certain models. Luxury watch market resilience. Contrary to doomsday predictions, the luxury watch market remains robust. Demand for sought-after models continues to outstrip supply, with waiting lists at official retailers stretching for months. The current price adjustments primarily affect a fraction of models and brands within the luxury watch market. The notion of a complete crash is unfounded, as the majority of watches, especially those with stable pricing, remain unaffected. A broader perspective on the decline. Zooming out reveals that the watches experiencing the most significant drops in value are essentially recalibrating to their prices of 6 to 12 months ago. While it may be disheartening for those who purchased at the peak, this correction signifies a return to a more sustainable valuation. The decline, viewed from a broader perspective, amounts to a correction of previously unsustainable price increases. It's a reminder that the luxury watch market, like any other investment, experiences cyclical changes, emphasizing the importance of a measured, long-term outlook. Well, there you have it, fellow watch aficionados. We've taken a deep dive into the fascinating world of luxury watches, exploring the highs, lows, and unexpected turns that have shaped the industry, with a special focus on Rolex.